What happened last week, you actually don't think it changes things very much?
I don't. I still think we're, we're advocating for this barbell type strategy where you should have some kind of cyclical reflation trade in your portfolio, as well as a technology and communication side as well. Those stocks have actually held up pretty well in the pullback, and it shows you that the earnings-driven side is quite powerful in both up and down markets.
So is this more about stock picking rather than thematic investing in this period before we have a bit more clarity around the inflation outlook? And in tech in particular, where are you seeing now, I suppose, buying opportunities given that that trade has become less popular?
I don't think it's exactly a stock picker's market. I think it's more of an industry and a sector picking market. There's still, if you're picking the best stock in the wrong industry or wrong sector right now, it's still going to struggle a bit. So I think that if we're finding these stocks with solid earnings drivers behind them, in the industries that should benefit in both a challenged market and, let's say, in terms of liquidity, this will be the way to go within the technology side. So the earnings drivers are going to matter the most.
Where do you see the cyclical rally going, the cyclical trade? Because we continue to see more reopenings around the world, especially in European markets.
We quite like that European opening trade. It's it's so cyclically oriented, especially within Germany. And when we see this reopening with still positive influences from both monetary policy and fiscal policy, I think there's still a lot more upside to come on within Europe. But it's a global trade as well. Global materials, global energy, global cyclicals in general. This is benefiting from this reopening, which is really just getting started. So I think there's a lot more behind it. We can call it value, but it's really about these earnings drivers that are coming from behind as well.
What about emerging markets in Asia? Because, of course, we saw them lagging. Have they been disappointing recently, especially given all of the headwinds that we're facing now, whether it's concerns about bond yields or just valuations in general?
I don't think it's disappointing. I think that's the wrong word. If you look at emerging markets returns, let's call it just sector returns overall, you've actually had pretty solid returns across the board. Maybe not as good in the financial side as in the DM space, because you just don't have as much trading revenue that's come through. But still, you've only had one, let's call it up until last week, only one sector that had actually negative drag, and that was the consumer side. So I'm actually quite positive on emerging markets overall, because what we're going to see is as we get to this reopening, you're going to have many more drivers from the consumer side of the trade. You're going to have a continued drive as well as consumer opens. It's going to lead into better financials performance as well. So I understand that there is a bit of disappointment. It's not the growth proxy we may have expected last year, but all of those drivers are going to come back as we begin to reopen and get better vaccination rates going forward. So I'm actually quite positive on EM here.